From Freeman Cal. Today, let's talk about legacy planning or a discussion on who gets what after the death of your parents or maybe you yourself if you are more than middle aged. So, this is shot from my mobile. My Mac's still not up, it's probably gone for good. I can't do this on my Windows camera, it's just awful on Windows. So I thought it's better to shoot it on mobile. So when it comes to legacy planning, you might have heard words like estate planning and so on. Estate means the assets that a person has left behind and how that's going to be distributed to their legal heirs. Now, everybody talks about a will when it comes to estate planning and the importance of a will. Yes, will is important, but there's a lot more that one should do, and a lot more that one can plan and make the transition super smooth. So, if well, you can make these suggestions to your parents if they don't get offended, or these suggestions may be of relevance to you. So the first, let's talk about bank deposits. So the first thing to do is to sit and decide. So the person who has these assets and who wants to do the estate planning or the legacy planning should first sit and take a list of the assets that they want to leave behind and make a list of who should get what. And then it's better to talk to the people and tell them face to face that this is what they have planned to do, instead of leaving a will. And you might have seen in the movies when after a rich guy is murdered, all the family members sit in the room waiting for the lawyer to open the will and read it, and they get angry and so on and so on. You don't want that kind of a situation, so it's better for people to know upfront. And even in the case of bank deposits, the best thing to do is to have different bank deposits, and with the second holder as a different legal heir. For example, you can have one deposit with the first child as a second unit holder, or the second holder, sorry. You will be the first holder in all the deposits. In one deposit, your first child would be the second holder. In another deposit, the second child would be the second holder, and so on and so on. And you can have these deposits operating in either or survivor mode or first or survivor mode. In each case, what happens is that upon death of the first holder, the second holder simply has to take the death certificate, write a letter, go to the bank manager, and they will circle out the first holder's name, and the second holder will become the first holder of that money. In this case, nomination is not necessary. Nomination is not useful also, because the money will definitely only go to the second holder. If you don't want to do this, then the option is to nominate different people for different accounts. And if in the case of nomination, the bank will require a notarized copy of the probated will, or they would require the legal heir certificate. Since legal heir certificates are available online, you can apply for it online in many states. If you had clearly indicated the different nominees for different accounts, then it's a simple matter for your legal heirs to get the legal heir certificate and get the money. So even then, it's not much of a problem. Of course, a will can also work. In the case of mutual funds, the situation is slightly different. The mutual funds don't care much about whether the legal heir is a second unit holder or a nominee. As long as there is nomination or there is a second unit holder, a simple death certificate is enough to get the money transferred into your account, or you can transfer them as units into your own mutual funds, depending on how you want to do it. Of course, KYC is necessary, but if you're already a mutual fund investor, then KYC should not be a problem. KYC, FATCA, and such things are not a problem. If please make sure all mutual funds have a nomination, because if there is no nomination, then you have to write an indemnity bond. There's one more certificate that has to be given. Then you have to prove the relationship without legal heir if the amount is less than 2 lakhs. If the amount is more than 2 lakhs, then legal heir or will is necessary, and so on. All these problems you don't want to get into. Also, properties can be a big problem. You may have a situation where one of your child is wealthy and abroad, and another child is actually living in your house and is not so wealthy, and so on. So you want to leave the house to them. So it's better to talk about all this beforehand and change the ownership or change the share in the house. And you can write a will so that so that after your death, the your share will go to your spouse or to your child, or however it is. You can plan all these beforehand. So all this must be done beforehand, and it must be not only a plan for yourself, but you must also communicate all this to your children, so there's no disputes or any kind of legal problems afterwards. Jewelry and all those things also you must be planning beforehand. So writing a will is alone is not enough. You must discuss and make sure you leave correct nominations, make sure you make the process smooth by having the designated legal heir as the second holder, and so on. So these things can make those transition very smooth. So you can also have, in case you have a spouse who is not well educated and so on, you can have a list of instructions left for a fee only financial advisor, SEBI registered advisor. You can tell them how to manage your estate for to get income for your spouse, or you can leave instructions to a trusted friend and so on. So all these can be done. Living will in India is now valid. You can write a living will also, where you tell people do not resuscitate, or if there is a, if I'm brain dead, just pull the plug and so on. Those kind of instructions can also be given in India now. So you can include that in your legacy planning. So legacy planning is a much more holistic approach to estate planning with all these kind of aspects covered. So that's what I wanted to talk about in this video. Thank you.